All right, diving in again with another deep dive. Today, we're taking a close look at Jubilant Foodworks Ltd's Q2 FY25 results. I've got all the good stuff right here, official filings, press releases, earnings presentations, the works. So we're ready to break it down and see what kind of insights we can pull out about how this food giant is doing.
You know what's really interesting to me is that we're not just talking about a pizza chain anymore. Jubilant Foodworks, we'll call them JFL. They're really like a dominant force in this whole emerging market food service scene. It's fascinating.
Yeah, and just to give people an idea of the scale, we're talking over 3,130 stores across 6 different markets: India, Turkey, Bangladesh, Sri Lanka, Azerbaijan, Georgia. And it's not just Domino's, right? I mean, their brand portfolio includes Popeyes, Dunkin'. They even have their own brands like Hong's Kitchen and Kia FFY.
It's a pretty diverse mix, and it seems to be working, at least when we look at their overall growth. System sales are strong, hitting 22,719 million rupees for Q2. And for the first half of FY25, a total of 45,084 million.
Okay, so they're clearly racking up those sales. And their revenue is reflecting that growth. They brought in, 19,547 million rupees in Q2, which is a pretty significant 42.8% jump compared to last year. And for the first half of the year, revenue hit 38,878 million, a 43.8% increase year on year. So big numbers there.
Yeah, those are some impressive numbers, but let's delve in a little deeper. I think the story gets more nuanced. Let's start with EBITDA. Earnings before interest, taxes, depreciation, and amortization. It's kind of a way to measure a company's operating profitability.
Gotcha. So EBITDA grew, which is good. But the first half margin saw a bit of a dip, down 35 basis points year on year. What's the takeaway there?
So essentially, while they are earning more, the proportion of that earning compared to their overall revenue has slightly decreased. It's something to keep an eye on. Now let's look at profit after tax. So the actual bottom line. Q2 FY25 saw a decline of 26.4% year on year and a margin decrease of 344 basis points.
Okay, that sounds maybe a little alarming. Is it time to panic?
No, not necessarily. Remember, JFL acquired DP Eurasia, their Turkey operations, back in February of 2024. So that acquisition is now fully reflected in their financials. It's naturally going to shake things up a bit when you're making those year-on-year comparisons.
Yeah, it's like adding a whole new branch to a tree.
Yeah.
It changes the overall look, but it doesn't mean the tree isn't healthy, right? And speaking of adding, JFL has been busy expanding their store network.
Absolutely. They added 73 new stores just in Q2 and a total of 139 in the first half of FY25. These new locations are spread across India, Turkey, and Bangladesh, all key markets for their ambitious growth strategy.
Okay, so let's slice into Domino's India, arguably their most important brand. 20.2% year-on-year order growth in Q2. So Domino's is clearly hitting the right notes with consumers over there.
And what I think is really interesting here is how those orders are placed is changing. Delivery is king now. It accounts for almost 70% of Domino's India's revenue. That's up over 4% compared to last year.
Yeah, seems like convenience is the secret ingredient these days, right? People want their pizza hot and fresh, delivered right to their doorstep.
And that's where Domino's shines, right? This shift towards delivery has really fueled their like-for-like growth, or what they call LFL. It measures growth in sales at stores that have been open for at least a year. So it gives us a clearer picture of their performance.
So we're not just talking about, new stores boosting those sales.
Yeah.
Existing locations are seeing a surge in orders, too. That's got to be a good sign.
Exactly. Domino's India reported a 2.8% LFL growth in Q2, driven primarily by a whopping 11.4% growth in that delivery channel. And don't forget their mature store average daily sales, what they call ADS. It's the average revenue a store generates per day. And for Domino's India, it reached 80,185 rupees, the highest it's been in 6 quarters. That's a powerful indicator of consistent, healthy performance at that store level.
Okay, so their existing stores are humming along, and they're adding new locations at a breakneck pace. 50 new Domino's stores in India alone, expanding their reach to a total of 447 cities. That's a pretty aggressive expansion strategy.
It is, and it speaks to their confidence in the Indian market. But it's not just about bricks and mortar, JFL is also making strategic moves in the digital space, their Domino's India app is a perfect example.
Yeah, let's dive into that because I'm
Yeah.
curious to see how they're leveraging technology to engage with those customers.
Well, their app is a smash hit. It's boasting a record 12.8 million monthly active users, or MAUs as they call them. That's an 18.5 jump compared to last year. So it's signaling that their digital platform is really resonating with those consumers. But the real question is what's driving that engagement, right?
Yeah, 12.8 million users. That's a massive pizza party. So what's the secret sauce of this app? What are they doing that's so different?
Well, that's where things get really interesting, and we'll dig into that a bit later. But first, let's talk about their customer acquisition strategy. They're not just catering to existing pizza lovers, right? They're reeling in new customers at a pretty impressive rate.
Give me the numbers. How are they attracting all these new pizza fans?
New customer acquisition grew by a solid 29% year on year. This suggests that their marketing campaigns and value propositions are hitting the mark, enticing new customers to give Domino's a try.
Okay, so they're expanding their reach. They're attracting those new customers. But loyal customers are the real bread and butter of any business, right?
Right.
Especially in such a competitive food industry. How's JFL cultivating that customer loyalty?
Their Domino's loyalty program is a shining example. It's booming with a whopping 27.8 million members, a 42.5% increase year on year. That tells us they're successfully building a community of dedicated pizza enthusiasts who just keep coming back for more.
Okay, so Domino's India is clearly a success story, but let's broaden our view a little bit. What's happening with JFL's international ventures?
That's a great question, and we'll explore those international flavors in the next part of our deep dive. We'll take a closer look at their performance in Turkey, Bangladesh, and Sri Lanka, and delve into their exciting new venture with Popeyes.
All right, sounds good. Stay tuned. Okay, so let's travel beyond India's borders now and get a taste of JFL's international performance. You mentioned Turkey, Bangladesh, Sri Lanka. Where should we start?
Let's start with DP Eurasia, their Turkish operation. Remember, this is fully integrated into JFL's financials now. They reported system sales of 7,719 million rupees with a pretty healthy EBITDA margin of 26.1% and a really impressive PAT margin of 10.5%.
Okay, so things are looking good in Turkey. Is it just the love of pizza, or are there other factors at play here?
Well, pizza is definitely a global favorite, but DP Eurasia's success is also tied to their strategic approach, I think. They've really adapted their menu and marketing to resonate with local tastes and preferences. They've also been focusing on operational efficiency and expanding their delivery network, which is crucial in a market like Turkey.
Yeah, it sounds like they've really done their homework there, understanding the nuances of the Turkish market. Now, what about Bangladesh and Sri Lanka? You mentioned those markets were a bit of a mixed bag.
Yeah. Bangladesh faced some headwinds due to temporary store closures, which impacted their performance. However, all stores are now back in operation, and JFL is working to regain that momentum.
Okay, so a bit of a setback, but they're working on a comeback. What's the situation in Sri Lanka?
Sri Lanka's a brighter spot. They've seen strong growth, driven by strategic initiatives like store relocations and new products launches. JFL is clearly committed to adapting their strategies to different market dynamics.
It's like they're playing a game of culinary chess, making strategic moves in each market. Okay, now let's talk about a brand that's causing quite a stir. Popeyes. JFL is betting big on this fried chicken giant in India, right?
Absolutely. They're rapidly expanding Popeye's footprint in India, with 54 restaurants already up and running across 22 cities.
So they're going head to head with the established chicken players over there.
Yeah.
What's their strategy for carving out a piece of that market?
Well, I think, Popeyes brings something unique to the table. Their Louisiana-style fried chicken is known for its bold flavors and crispy texture, offering a distinct alternative to those existing chicken options. JFL is also leveraging their expertise in delivery and digital marketing to give Popeyes a competitive edge.
So it's not just about the chicken, it's about the whole experience they're creating. It's about convenience, online ordering, and that delicious Louisiana flavor.
Okay, so we've covered JFL's performance across these various markets, and we delved into their brand portfolio. But what about the bigger picture? What are their overarching strategic priorities, and what does their outlook for the future look like?
Well, their commitment to Domino's is unwavering. They're doubling down on this powerhouse brand, investing in brand building, product innovation, and expansion. Think think new and exciting pizza toppings, revamped store designs, and even more seamless online ordering experience.
So Domino's is still the star of the show, but they're constantly polishing it to keep it shining bright. What else is cooking in their strategic kitchen? Technology is at the heart of their strategy. They're leveraging data and analytics to gain a deeper understanding of their customers, to personalize their offerings, and to optimize their operations. Imagine a world where your Domino's app, knows your favorite pizza toppings and suggests new combinations based on your past orders. That's the power of data-driven personalization.
It's like having a personal pizza concierge right in your pocket.
Yeah.
That's pretty cool. But technology isn't just about those customer-facing initiatives, right? It's also about streamlining their operations behind the scenes.
Exactly. JFL is implementing technology across their entire value chain, from supply chain management to delivery logistics. Remember their impressive 99.6% fill rate. That's a testament to their robust and integrated supply chain model, which ensures that ingredients are always available when and where they're needed.
So they're not just delivering pizzas, they're delivering on operational efficiency. Speaking of delivery, let's talk about their fleet. Aren't they making some moves towards sustainability?
Yes. They're expanding their fleet of electric vehicles. Currently, 53% of their delivery vehicles are electric. And they're committed to further increasing that number. They're also focusing on renewable energy in their commissaries and embracing responsible sourcing practices for their ingredients.
So they're really baking sustainability into their business model, which is a smart move considering the growing consumer demand for those eco-conscious brands. But beyond those initiatives, what's the key takeaway here? What's the one thing our listeners should remember about JFL's approach to technology?
Well, I think JFL recognizes that technology is not just a tool, but a transformative force. They're not just dipping their toes in the digital waters. They're diving in headfirst, using technology to enhance every aspect of their business.
Okay, we've covered a lot of ground here: financial performance, brand strategies, international expansion, and their technology-driven approach. It's time to distill all this information into some key takeaways for our listener.
Let's do it. What are your main takeaways from this deep dive?
It's clear that Jubilant Foodworks isn't just sitting back. They're actively pushing the boundaries, whether it's through that aggressive expansion or innovative product development, or embracing technology like we talked about.
Yeah, they're not afraid to experiment and adapt, which is crucial in such a dynamic industry like food service.
And they're not just focused on growth for growth's sake either. They're thinking about sustainability too, right?
Yeah.
Both in terms of their environmental impact and building those lasting relationships with their customers.
Exactly. That long-term vision is definitely reflected in their commitment to initiatives like the EV fleet expansion, responsible sourcing, and that impressive loyalty program. Millions of members, they're playing the long game, and it seems to be paying off.
So for our listener, who's maybe grabbing a slice of pizza or a chicken sandwich while they listen to this, what's the key takeaway here? What does Jubilant Foodworks' story tell us about the future of the food industry?
I think Jubilant Foodworks provides a really compelling case study for how a traditional food company can successfully navigate, the complexities of the modern market. They're demonstrating that embracing technology, understanding consumer trends, and prioritizing sustainability aren't just, buzzwords. They're essential ingredients for success in today's world.
They're not just serving food, they're serving up a vision for the future of the industry. And that future looks pretty delicious. But before we wrap up, let's go back to that question you posed earlier about their app and those really high user engagement numbers. What could be driving that success?
Well, there are a few factors I think that could be at play. First, their app offers a really seamless and convenient ordering experience, right? It's user-friendly, it allows for customization, it makes it, really easy to track orders and earn loyalty points. Second, they're likely leveraging data to personalize that user experience. So, this could involve suggesting menu items based on past orders, offering targeted promotions, or even providing like location-specific deals.
So it's not just about making it easy to order a pizza. It's about making the whole experience feel tailored to each individual user.
Exactly. And third, their loyalty program probably plays a significant role in driving that app engagement. With millions of members, the program offers exclusive rewards, personalized offers, and even gamified elements that keep users coming back for more. It's a really brilliant strategy, I think, for building that customer loyalty and encouraging repeat business.
Yeah, it's like a delicious cycle, right?
Yeah.
Great app experience leads to more loyal customers,
Hmm.
which in turn generates more data, which allows JFL to further refine and personalize that app.
Exactly. And that brings us to a final thought-provoking question for our listener to consider. Given JFL's commitment to data and technology, how might they leverage these assets to create even more innovative and engaging experiences in the future? Could we see the rise of hyper-personalized menus, AI-powered order suggestions, or even virtual pizza parties in the metaverse? The possibilities are really exciting.
Yeah, it's fascinating to think about how JFL, a company that started with a simple pizza, is now at the forefront of shaping the future of food. And that's a wrap on our deep dive into Jubilant Foodworks Ltd. We explored their financial performance, their strategic moves, and their vision for the future. Hopefully you gained some valuable insights and maybe even a few aha moments along the way.
It's been a pleasure diving deep into this topic with you. Until next time, keep exploring, keep learning, and most importantly, keep enjoying those delicious meals.